following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, folks. Miracles happen to those who believe in them. Bernard Bertson. Market-wise, let's take a look at it out here. We have the Dow Industrials up 9, NASDAQ down 23, S&P's up 2, gold contract down $6.50, traded at $1,269 an ounce. Silver down 22 cents at $17.09 an ounce. Platinum off 16 bucks at $1,049 an ounce. Copper down 2 pennies at $2.07 a pound. Light sweet crude up 26 cents, $46.49 a barrel. Bonds, you had the 10-year note down 8 ticks, 130.20. 30-year bond down 15 at 165.23. King dollar up 360 ticks, trading at 94.15. The euro is down 55 at $1.13, and the yen is up 67 at $1.09. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? We got a trader's paradise in this market, folks, and here you go. So, you take a look at the SPY. What you have with the SPY is this. SPY gets down to a price point today of $205.37. What that was doing, you had 86 million shares traded. Now watch this, because this is a subtle, little tricky, but pretty cool. So, what the SPY did, folks, is got to the high of the low of last Friday. It rejected that price, and it had lighter volume. Not a huge amount of lighter volume, but it had lighter volume. We did 86 million versus 89 million. So what does that set up? That sets up, guess what? This market still wants to get in, I expect, to the last swing point, which is that $209.81. The NDX 100, we take a look at the Qs. What do you have with the Qs? Same type of setup. Subtle. We've done 28 million shares, and what are we doing? We're going into the low, the high of the low of last Friday. That high was $105.60. You got to $105.14. It rejected lower price. It had lighter volume. Can't bust them down. Guess what? It's going to go try to fill the higher end of this whole range it's in right now, which is $108.12. That, and this is what's really pretty cool here, we're talking about what Apple breaking down. We have with Apple out here today, Apple was down $2.19. You did 75 million shares. It's blowing apart those lows out there. Bottom line, inside the Dow, inside the S&P, inside the NDX 100, all of those are affected by Apple in a big way. Apple, as it broke down, did have lighter volume. Now, I think Apple's going a lot lower, but with the lighter volume, that also can catch a bounce. Gold contract, what do we have with gold? Gold contract wants higher price. Now, this is going to be wild coming into a Friday. You did 206,000 contracts today. That is high volume. We did high volume yesterday. You're still at these highs. Gold wants to make this run for the 1306. We'll see whether it can take the 1306 out. We'll see if it has enough volume. Yesterday had plenty of volume. We did 240,000 contracts yesterday. Today you've done 206,000 contracts. Big numbers as you're going into those highs. Silver. Now, silver has a problem, And this is what the problem is. Silver out here is down 20 cents today, and you have volume. So there's no doubt that tomorrow morning inside the metals market, you're going to have volatility. Silver yesterday went high with 49,000 contracts. Today, you're down with 52,000. Now, the 52,000 is going into 56, so that's not bad, but it would have been nice if silver also was projecting the same higher price. What is projecting lower price, meaning that the S&P still wants to bounce, is the 10-year note and the 30-year bond. And this is what it is. 10-year note out here today did 1.1 million contracts. Now, not a lot of movement. You went from 130.30 to 130.16. We closed out at 130.21, but you had an expansion of volume off the high that was generated out here yesterday. So what that's setting up is that, to me, that's setting up and wants to run to the lowest swing point, and that lowest swing point, we're talking 129 to 128. Now, if that's, in fact, what the 10-year wants to do, let's go over to the 30-year. We take a look at the 30-year. What you have with the 30-year, that did 244,000 contracts. That really was just a sideways move. But you also had a pickup in volume. So the 30-year also, let's see, we're at 165. Yeah, the 30-year got over that April 20th downdraft. It's been over that for one day, closed underneath it again. That's saying the 30-year also wants lower price, higher yield. That's the case, lower price, higher yield. What does that set up? What that sets up, folks, is that this market still wants to bounce before it gives it up. Now, let's go to King Dollar. We take a look at King Dollar. What do we have at King Dollar? Okay, so King Dollar is out here. It did 18,000 contracts. You are up 345 ticks. Bottom line, King Dollar needs 21, well, he's like 30,000 contracts. That's coming into 29,000 contracts. So King Dollar can't catch a bid topside. King Dollar's building cause, the cause it's building is to go down and at least test the lows of last week, which that low was 91.88. The way that we broke down at that level, I expect what you're actually going to see is that we're building cause to get into the $88 area, which is pretty intense for King Dollar. So that basically is going to set up commodity prices that are higher right across the board, because without King Dollar catching a bid, top side, bottom line, that goes right into the commodity price, and it goes in there very quickly. If we go over to the oil market, oil's already made quite a run. Oil out here today did 685,000 contracts, and it's at its highs. The last swing high out here was $46.78. We hit 47. We did that with 685,000 versus 598. So the way that also is setting up, we'll see whether it can take that baby out and get up into the $48 area. But right now, that's exactly where this baby looks like it's going. You stay right there, folks. We're going to be coming back with our man, Mr. Chris Gaffney, the president of Everbank World Markets. Dow Industrials finished up 9, NASDAQ down 23, S&P's up 1. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 9, Nasdaq down 23, S&Ps were flat. We're going to go over to our man, Mr. Chris Gaffney. Chris is the president of Everbank World Markets. And, folks, as you come over to our website at TFNN, you're going to see the Everbank banner on the right-hand side. Now, as you hit that banner, what you're going to see, it brings up a second chance to grow with a new financial resource. And what we're talking here is this, it's a 5-year market-safe commodity solution CD. Now, what's so cool about this, this is a CD that is U.S. dollar denominated, which allows you to earn up to 70% upside payment at maturity if the commodities that Chris and I are going to talk about right now increase in value across annual pricing dates. Chris Gaffney, welcome back to TFNN.
Well, thank you very much. It's a pleasure to be here.
You know, last week we had the dollar hit 91.88. Pretty intense.
Yeah, we've seen the dollar index really start coming off its recent highs, and whenever the dollar goes down, of course, that gives commodities a little bit of a boost since they're all priced in dollars.
Sure. So let's talk a little bit about what we have here, and folks. So inside this CD, and this is really unique what Everbank does and continues to do, we have 8 commodities. You have WTI crude oil, gold, silver, soybeans, corn, sugar, copper, and nickel. So can you explain how this works, Chris?
You bet. We take those 8 commodities and we're going to measure the price of those commodities at the beginning of the CD, and then we're going to have 5 annual pricing dates. So every year we're going to take the value of or the price of those 8 commodities,
yes,
and calculate a percentage gain or loss on each of those. And then we'll average all of those 5 annual pricing dates out to come up with a performance on the CD. And the investor's going to receive whatever the upside is on the average of those 8 different commodities. It will be capped. Each of those performances will be capped at 70%. So at the maturity after 5 years, an investor into this market-safe commodity solution CD has the ability of receiving up to a 70% upside. no matter what happens to those commodity prices during the 5 years, if the client is guaranteed to receive their principal. So it's really a way for clients to participate in the upside of these commodities and with really no downside risk.
And, before at the hour break, I just did an hour and I had a break. So what I did, folks, is that I went over to bankrate.com, which is a great site to say, okay, who has the highest rates in the whole country right now? That's what they claim anyway, okay? And the reason I did that, folks, is this, is that, okay, I'm a commodity bull. Dollar looks like it's going down. And I wanted to see, okay, what are you giving up? If you're a CD person, you're in a CD market, I can totally understand why, because you want your principal back, and that's important in these markets. The largest rate I found out there, Chris, okay, was 1.98 on a 5-year CD. Right. And so what's so cool about this is that for the client, that's all you're really giving up. I don't think you're giving up anything, but that is the reality, right? Because you're getting your principal back, and you have a chance to get up to 70% at the end of 5 years. And, I know that's a huge amount, but guess what? You can be up 10 or 20% pretty easy.
Right, and that is really the cost of when you look at investing into this CD. Your principal is guaranteed. So as you suggested earlier, especially in these volatile markets, return of principal is really as or if not more important than return on principal. But with that, the cost of investing into this CD is really the opportunity cost, what you would have invested it into. And with rates where they are, as low as they are right now, there's really not there has been very few times when rates have been this low, and therefore your opportunity cost for investing in a CD like this, the Market Safe Commodity Solutions CD, is really low historically speaking, and therefore it gives you a great opportunity to again invest into this CD and benefit if and when these commodity prices run higher, and we've certainly seen a first quarter. When you talk about value in the commodity markets, these commodities have been hard hit the past 5 years. If you look at them, they started to recover during the first quarter, but they've got a long way to go before they get back to the levels they were trading at 2, 3, 4, 5 years ago. So
sure. And you know what's so cool too? And so picture this, folks, okay? There's plenty of you folks that have never been in the commodity market, right? I would love to get in it, and it's so volatile that you wouldn't want to get in it. And I don't blame you. And what's so cool about this, Chris, right, is that they actually can be in the commodity market without any of the volatility that, of course, is in the commodity market.
And all the anxiety and worries that come along with that volatility.
Totally.
You don't pull your hair out every time you see, one of the agricultural commodities drop, soybeans fall through the floor. Well, a couple things. First of all, these are very well diversified. So you're not just totally dependent on oil, on the price of oil. That's only 1/8 of this CD. So, that helps you, and the fact that it's an averaging. So, if they run up and run back down, as long as over the 5 years the average return is positive, you're going to get that positive.
That's huge. And so picture this too, folks, okay? You're talking about an FDIC insured product. You're talking about you get your principal guaranteed 100% protected. To open the account, you need at least $1,500, but if you're getting a CD, whether it's $10,000, $20,000, $100,000, whatever that is, it's also IRA eligible, folks.
Right. Great point. I was just going to bring that up. It is IRA eligible. What a great way to get commodity exposure in an IRA account. And really, with your IRA accounts, that's money you want to see the principal protected on IRA money. You want to make sure that money is there when you retire.
No doubt.
And so this is a great way to see get participation in the commodity markets in a CD that's going to have principal protection.
And folks, you can come over to our website at TFNN. You're going to see the banner right there. You can also give them a call. They'll walk you through it. Their phone number is 855-750-4051. That's 855-750-4051. Chris, I love these products you come up with. It's just amazing, man. I mean, and in this one in particular, because we know how volatile commodities are, and where can you go and you get your principal guaranteed, but guess what? You get upside, man. It's awesome.
And one thing, I mean, this does expire. The
Yes.
funding deadline on this one is May 19th, so it's a week from today.
Thank you so much for that. Right.
Don't drag your feet. This is something we had an earlier issue of this same series, the Commodity Solutions, very popular. And this will probably be the last issue of this series.
So go there, right here, right now, folks.
Yep.
Chris, thank you so much. Have a great one and have a safe one, man.
You too. Thanks.
Okay. You stay right there, folks. We're coming right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solutions CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, if you are interested in that 5-year commodity market safe CD, you can give them a call at 855-750-4051. And remember, you have to open it and fund it by May 19th, okay? So it's a here now deal, great deal. Okay, let's go through some numbers out here. You got Nostrum's getting smoked, JWN. Let's go take a look at Nostrum's. So Nostrum's closed at $45.23. They just come out with their numbers. It's trading at $38. Let's see what the numbers look like first. So numbers go like this. Their first quarter comp sales were down 1.7%. That's not as bad as the Gap. The Gap was down something like 13%, but bottom line, it's still bad. The earnings per share, $3.29. The revenue, rather. The revenue is $3.29 billion. That was the estimate. They took in $3.25 billion. The earnings per share was 26 cents. That must have been below. Yeah, they were looking for. It must have been below. But the next, they see year-adjusted earnings. They saw, so for the full year, they had seen $3.10 to $3.35. Now they're seeing $2.50 to $2.70. So let's just go take a look at it and how this is set up. So $45 it closed at. It's at $38.18. It's blowing away a swing point. Let me pull this back a bit. Man, this is a mess. These retailers are just a mess. So you're going to take out the swing of $44. This is down from 77. And you're going to, let's see. So your A point on this is 70. Your B's 44. $26. Your C is 56, 59. So you got $34. And so the ABC down is $34. It's at 38 right now. We bring this back a bit. We're evidently not shopping at department stores anymore. Well, it looks like, so $34. So check this out, folks. This is going to be problematic in where this market wants to trade out to. So $34 is the high of the September 08 low. Where it looks like it wants to trade into is 26, which is almost the high of the low of 2008. That's a big problem, man. That is a big problem. No two ways about that. NVIDIA, NVDA. Now this is just the opposite. NVIDIA closed at $35.57. That's trading at $37 right now. That's taking out a high. Let's see what they have to say. So their estimate was 41 cents. They took in 46. Bottom line, revenue. The expectation was 1.26 billion. They took in 1.3 billion. So they beat on the top and the bottom line. This little baby here, we bring this back. This is taking out highs. Yeah, so you're going to be over the 37, let's see, 37.46. That is taking out highs. Shake Shack, S-H-A-K. Let's see what this baby's doing. So Shake Shack, excuse me, it's a roadside burger stand. New modern day roadside burger stand. That closed at $34.26. That is trading at 36. Let's see what this thing looks like. So this has been, they took everyone to clean this here too. So this is down from $96. My God. What did it do an IPO at? You talk about pushing paper out, man. So this did an IPO at 21. That'd be right, yeah. It did an IPO at 21, then it did a secondary, folks, at $60. Oh my God, unbelievable. Okay, so let's see what they have to say. Their earnings their sales, their comp sales are up 9.9%. Their revenue is $54 million. Where's the earnings? 1 second. Sorry about, oh, here it is. Okay. So their estimate was 5 cents. They made 8 cents. Their bottom line, their top line, the estimate was $52.2 million. They made $54.2 million. So bottom line is that they do have some juice underneath them. Our phone number is 877-927-6648. If we take a look at these markets, so what's going to be really wild here is this, folks. we're coming into a Friday. You've had the market, let's go look at the small caps, actually. We've had the market gyrate, and we're exactly where we were last Friday, by the way. If we look at the small caps closed last Friday at $110.91. Right now, you're at $110.37. You know, so bottom line, let's go take a look at the SPY, where the SPY was in a week. The SPY last Friday closed at $205.72. You're at $206.56. This is still a high-end consolidation, and these highs want to be tested. Now, if you want to come to my workshop tonight, I'm doing a workshop, folks, and this workshop is for my subscribers to my daily newsletter, Market Insights. Well, it's not too late to be a subscriber. You can go test drive Market Insights, 30 days, absolutely free. If you do that, you're going to get a copy of my book, The Art of Timing the Trade. You get the workshop free tonight. You get the newsletter for 30 days, and you get into Tiger's Den for 30 days. So check it out on the front page of TFNN. It's going to be the 6:30 to 7:30 tonight. What I'm going to be going through, the Qs, the SPY, the XLE, the XLF, and I'm going to make the case of why it's time to sell in May and go away. Baby, watch out. You know, I'm waiting for that little high to come in, and the deviance is no doubt huge. You know, particularly because what is happening right now is that, you know, the retailers have got absolutely smoked, man. And these retailers, you know, it's like, okay, what is taking them south? Is it that we are not buying anything? Or is it the fact that we have too much junk and we'll figure that whole deal out? Or are we ordering everything off Amazon or online? Or are there actually specialty shops that are popping up, which they are in many cities, small specialty shops that have something different? You know, it's probably all of the above. But these large stores, now, you know what's really here? I'm going to switch gears on you for a second. Because if you go over to the large REITs, okay, you'd think that when you see Simon Property Group, folks, is the largest owner of malls in the country. So Simon has been on a one-way run. You know, if you look at Simon, you know, last 2 days it got killed. Well, not killed, but it's down 10 points. But if you pull this back, what you're going to see is that, man, oh man, you know, Simon has gone from a price point of $22 in 2009. It's a 10-bagger, up to $200. It's like, okay, if malls are getting killed, that should be getting killed. We'll talk about that as soon as we come back. I'll show you why that was up, but it doesn't have to be up forever. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go to David in Boston. Hey, David, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
I'm good. I just I'm enjoying the weather over here. It's beautiful, 75 degrees.
Oh, that's awesome, man.
Yeah, finally.
Yeah, exactly. Get some good weather. That's good. You've had a rough, I guess last couple of days were all right, but last week was wicked, right?
Yeah, it was chilly. It was cold. I mean, we did all right in the winter. There wasn't much snow, but it's been cold here. But
Yeah.
But no, we'll take it.
Big time, man.
I wanted to ask you about Solar City. They got kind of hammered the other day on their earnings. I bought a little bit this morning. Want to see what you think.
Let's take a look. You get Solar City. It's SCTY. So the low of the year is $16.30. The high is 63. They lose 28 cents a share. So let's pull this back and see what we got here. Yeah, you got to get out of town here, man. This is pretty intense. Okay, so you have an equity that's down off, if we go back to 2014, it's $88. When you came down in February and hit a low of $16.30. Now, I have this on the weeklies, David, all right?
Yep.
So the weekly, it came down there at $67 million. And this week alone, we've already done 62. And we hit 1650, and the low that it's pounding into is 1630. So,
right. I know it held the low there. I mean, I'm looking for a bounce. I'm not looking to get married to the thing.
I'm with you. Yeah. I wouldn't hold it till next week.
Okay.
Because what happens is this, is that when you are pounding into a low, and we already know it has higher volume, that thing could just fall out of bed, man. But okay. The bounce, you got a tiny one today, and maybe you'll get to $19 tomorrow.
Okay.
Well,
don't hold it over the weekend. You think
I wouldn't. I wouldn't, man. Because see, what you have here is this too. So picture. Right now, there's a 33% short position in this equity, right?
Yep.
So what you should have already got, okay, is that as a short squeeze, they should be able to try to get the thing going, but they can't. So that is a problem.
What do you think about buying a put against it just to protect it?
No, it's too dangerous, man.
Too dangerous? Okay.
Yeah,
right.
Because what you're also going to have is I bet the premium in the puts are huge.
Yeah.
Because everyone's going to, let's see, 1850. Yeah, they're huge. Even in 1850 this month, which expires, next week, right, is a $1.35.
Right. I mean, it's a volatile buy. It moves quite a bit. I mean,
yeah.
So if I can get a buck out of it tomorrow, I'll get out of town.
I wouldn't hold it over the weekend just because of that how it's banging. And listen, you can always get back in it Monday morning, but keep it tight, man.
Okay. All right. Thanks, Tom.
Cooking brother, man. Have a great one. Have a safe one. Some of the higher volume stocks out here, folks. Actually, let's go to FCX first. So we get a lot of questions about Freeport-McMoRan now. Freeport-McMoRan closed at $11. And it's possible that we're going to get close to a buy here in the next week and a half. And this is why. So they just turned around and said that they're going to do a secondary. They filed for $540 million of common stock. The key here is going to be, okay, what are they going to try to push it out for? And that's going to be a big number. And what also is going on is that yesterday, I believe, they did a deal with Noble. And the deal they did with Noble, folks, is this, is that they're going to pay Noble. Listen to this number. This is like insane. But this is getting out of a contract. They're going to pay Noble, I believe, $540 million to get out of a contract, an oil drilling contract. There it is. Here it is. Freeport's going to pay Noble Corporation $540 million to not use 2 oil rigs. That's how expensive they are. So it's smart. So they're going to get rid of that, number one, that liability. They're going to go out to the marketplace. They're going to sell stock. So the kicker when you do that, folks, is that we'll see they'll sell the stock under the market. It just depends on what the demand is and how far under the market they have to sell it. The way that Freeport-McMoRan, you got to remember, this stock went straight up from $3.70 to $14. I suspect we're going to be back somewhere about the $9.17 to $10.45 level. You want to let it get settled in there first and see how it shakes out. And what is happening is that a lot of these commodity stocks, okay, have gone up so dramatically that you do have them going to market. So if you happen to own a commodity stock, what you want to do is you want to stay attuned to have they filed paperwork that they can push equity out. Because this is what ends up happening. A lot of, especially, all equities do this. But if you do a shelf filing, and that's what companies like to do, what a shelf filing means is this, is that first they file it, they keep it on the shelf, and they can take it out any day they want. Once it's filed, what ends up happening, bang, they can just pull it out. When they file the shelf filing, what you want to get your head wrapped around is that what is the amount of shares that they can sell so that you know the correlation, the percentage of how many shares are outstanding versus what that is. And they're not necessarily bad things either. That's the other side of it, folks. Because what has happened right now in the commodity business is that he or she who has the cash will be able to go out, particularly in the metals, but probably in the metals business for sure. They're going to be able to go out and buy assets in the ground at not the lowest price, because we're off that lows, but a very inexpensive price compared to where these assets were, of course, at the highs of 2011. So bottom line, even if they don't do that, that's cash in the bank, and cash in the bank is always a good thing. Our phone number is 877-927-6648. Oh, I know. Let's go to SPG. That's what I wanted to do. So Simon Group. So Simon Group was a 10-bagger. This is the largest mall operator in the country. Now, this is what you have. Last 2 days, what do you have? You have volume off the high. We hit a high on Tuesday of $214. Yesterday, you came down with 4 million shares. Today, we came down with 3. That's after hitting a high with 1.1 million shares. So what you want to see here, what I want to see here anyway, is a bounce on light volume. Because what we do have is that this has been in a consolidation since January of 2015. It broke over the consolidation, and now it's going to fail that break topside. When you fail a break topside, that's a huge problem, because can't bust them up. Guess what? It's going to bust them to the other side of that consolidation. So inside that whole mall area, you got to figure if you have the largest department stores, Thus far, that's what we've had. Macy's is the largest department store retailer in the country. Nordstrom is pretty big. The Gap, of course, is huge. Those three, picture those three. Picture how many malls you go to that you see those stores in. Well, they're all having problems. What does that mean? That means that the landlords are going to have problems, folks, okay? Because guess what? Those stores are huge. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 9. NASDAQ down 23. S&P's up $1.50. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Let's go overseas and take a look at what we're thinking overseas tonight. So if we go to the Hang Seng first, what you're going to see last night. Last night, the Hang Seng was down 139. You are at 19,915, and yeah, that looks to be trying to fill a gap, but I suspect it's at the top of the gap right now. That thing looks like it wants to bounce just a bit. The Nikkei in Japan, what we have in Japan, Nikkei, this gets interesting. So the Nikkei rejected lower price last night, had lighter volume. We're at 16,646. That says the Nikkei is going to try to get back over 16,814. So that's quite a move topside. We go take a look at the UK. What we have with the UK, UK was straight down out here today, down 58. And Yeah, but what you have here, okay, this is pretty cool. So watch this. What the UK had is this. Now, this is going to be a little tricky. We got to a high of 61.93. You gave it up on price, but you had volume going into that high. We did 699 million. So that, yeah, that's saying go topside once again. It's going to have to be quick tomorrow morning, but that's saying that can go topside. The DAX in Germany, well, we have the DAX in Germany. DAX in Germany also came downtown today, down 113. Oh, man, there's divergence here. And that had volume, though. So we went down 103 million, and you're going into 89 million. We get divergence, baby. That divergence is saying the DAX can go south. Now, check this out, because the DAX loves trading like the NASDAQ composite does. If we go over to the composite, however, what you're going to see, and this is even with the weak link of Apple, is that the composite got down to a price point of 47.10. We closed at 47.37, and you were coming into the highs of the low of last Friday. Sorry, folks, excuse me. And you had lighter volume. So the composite itself, which is a weak dog, still wants higher price. You know, what we have index-wise is this. So Apple, folks, is going to be the story for probably the next couple months, because Apple wants a lot lower price. Apple right now is just over 10% of the NDX 100. Coming up the rear in the weighting structure is Google. Google right now is running about 9.5% of the NDX 100. Amazon could be the big dog if it keeps running up topside. Well, actually, it wouldn't have to keep running up topside. If Apple keeps lowering itself, if everything else stays the same, Amazon and Google would end up being as big as Apple is or slightly under it. It looks to me like Google's going to be the one that takes it over. The reason being is this. What happens with Google is that you have two shares. You have GOOG, and then you have GOOGL. And what ends up happening is that they list both of them. So you have to combine both of them to give you the weighting structure, because they trade together. They're just two different classes of shares. Market-wise out here, don't forget, if you'd like to come to this workshop tonight, it's not too late to sign up. You can come over to our website at TFNN, sign up right in the front page. It's going to be from 6:30 to 7:30 tonight. Great education. We're going to walk you through where this market is and where, well, not only just it's going to be where it's been, where it is, and where I suspect it's going to be. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. You stay right there. Our man, Mr. Andy Heck, is coming up next. And don't forget, you get us right on your cell phone. Just go to TFNN.com, hit Tiger TV. Wow! Go get them, folks.